Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is going to be our psychology workshop and trader Q&A. What we'd like to do today is cover some news. We've got to cover the news. I mean, there's absolutely so much going on right now, but there's also a lot going on in the markets. We've got a great day to talk a little psychology because we had two trades that came across the board for me personally that I put out, and both of them ended up losers. The reason why, we had a big-time news event during the overnight that really shocked a lot of traders, and it shocked a lot of money into some momentary spikes. And what a spike is, I'm going to show you what a spike is. A spike in liquidity, a spike in volume can make the market go absolutely crazy, and that's exactly what we saw last night. So I want to welcome everybody back to the room. It's going to be an interesting day. If you have any questions at all, for me personally, I am more than happy to answer anything. Today's a great trader Q&A day. I will answer your questions sort of as we're going through these psychology concepts. We're going to spend a little bit of time on the physiology of your brain chemistry. I've talked about this a little bit in the past, but I want to get a little bit deeper into it. As far as any question, trading, supplementation, sleep patterns, day patterns, professionalism, whatever you really want to talk about, I'm more than happy to answer anything. Pretty much an open book here. I've been a trader since 2011, right after the big financial crash of 2008. I was in the real estate industry. I had to make a change, so I decided to get into active trading, but I had a big leg up on the competition. I learned from my uncle Gary Vernier, who's now passed away he passed away in 2012, so it's been quite a while, but he was my mentor, and he was a big shot on Wall Street, made millions of dollars trading crude oil for Shell, also worked for a few other firms. Northville Oil was another big one, and basically was a person that was an insider on Wall Street and was able to take those skills to the screen, which you don't see very often. Typically, the folks that worked in the old days, they don't necessarily do real great in front of the screen, and a lot of that was psychology, understand what we were working with. So if you have any questions at all for me, I've been in about 15 years, quite a while. I don't know everything, and if I tell you that I don't know, I will mean it. I really don't know. But we know a few things. We know a few tricks, and we know a few different ways to trade. Have a few different playbooks that I look at, a few different game plans for trades that are fairly successful. The ones that we lean on this stream typically are the Fibonacci retracements. That 920 is really growing on me. It's really growing on me, the 920 EMA crossover. I like that. I can see some real potential in applications of that in concert with some other indicators. And I'm still doing some work there. I don't really want to talk about that until that work is complete. But I'm more than happy to answer any strategic questions, any psychology questions, and we've got an absolute lot of news to cover, guys. So it's really a big day on Wall Street. Blue Mango, good evening. I hope you're good. I'm very, very good. Annie, good to see Annie. Let's see, Bobby Bob, always a pleasure. Lita, how's it going? Andrea Garwal, good to see Andrea. Tuku. All right, guys, this is the big story here today. Government shutdown live updates. Senate fails pass funding bills again. Now, this is going to impact us in a couple of different ways. There's another story right there that we're going to talk about in just a second because it's a big one. But this government shutdown live updates, this is big because we don't know when the government's going to reopen. Now, there's a tremendous amount of negotiations going on right now. Government shutdowns can last, I believe the longest was 51 days. And I believe that was back in 2017, something like that. The longer these things go, the more people get angry, and a lot of the government workers aren't going to be paid. The military folks aren't going to be paid. There's questions about Social Security benefits being doled out in an effective fashion. But for us as active traders, the number one thing we need to do is look at, okay, what's the impact on the market? Right now, not much. I'm going to show you the equities indices here in a minute, but there just isn't much going on there. As far as what does this mean for us specifically this week, it's a big deal. We have US NFP Live that was scheduled for Friday. Friday, we were going to go ahead and go on about 10 minutes early and trade it and show you the numbers and talk economics and all the different things that we need to talk about here to be sort of in the know, educated, savvy traders. I don't know that it's going to happen now. You see right here, this is the U.S. Bureau of Labor Statistics, and you can see right here, here's the announcement on their website, suspension of federal government services. So let's go ahead and click more info. Suspension of federal government services, U.S. Bureau of Labor Statistics, that is who makes the NFP report and counts up all the jobless claims. All right, this website is currently not being updated due to the suspension of the federal government services. The last update to this site was Wednesday, October 1st, 2025. Updates to the site will start again when the federal government resumes operations. All right, that's a problem. For us active traders, that's a problem. What did they say? They're not going to issue the number until they resume services, till the federal government opens again. But they've already done the numbers. They already know the NFP numbers. And I'm not going to be a conspiracy nut here. I'm not going to go off the deep end. I'm not going to tell you anything. But I do know this. The big money, and when I mean the big money, the insiders. Take a look at your lawmakers. Take a look at the folks that work at hedge funds. Take a look at your investment bankers at the highest levels. Take a look at your Federal Reserve governors, your FOMC members. You've got a pretty good idea that those folks already know what's in that report. Now, Shane, that's crazy. That's asymmetric information. It's insider trading. Yeah, it is. And if you don't believe me, check out some of the people in the U.S. Congress. See how much money they've made off of the stock market since they've been elected. There are some rags to riches stories in there. People that had $250 and barely got into town got in with some great inside information and some stock picks. They're not brilliant stock pickers. They didn't just get access to the best fund managers. They know what's going to happen before we do. Now, listen. That's illegal, technically. If you or I had information like that and went in and capitalized on it, we would be in big trouble. They would probably throw us in jail, give us the Martha Stewart treatment. We'd go to jail for 6 months. And that's life. That's the way it has to be if you're going to have supposedly an efficient, honest marketplace. But in the government and at those highest levels, understand as part of your trading psychology that we're probably the last ones to get the information. It doesn't necessarily ruin the markets for everybody, but what it does do is it gives certain people an edge, and they've got the edge and we don't. There's no sense crying about it. There's no sense being angry about it or banging on the desk or trying to get a radio show talking conspiracies all day, because that's not what we're about. We're about money. We want to make money. So as long as we know that something potentially could come our way that could be an outlier, then we can avoid it. Then we can manage our risk and be just fine. That's what I want everybody to think about. Don't sit around and go, oh, the world's against me and I can't compete and all this stuff. You can compete, but you've got to be smart about what you do. This Friday is going to be a very delicate situation. Take a look at the US 30 here over the last several sessions. This is a daily chart, US 30, right? We pointed out this spike high to you the other day, right around 46,750 or something like that. We also really wanted to focus on that RSI being really creeping towards 70 on the daily. That's a big deal. But look at what we've had really the last 3 days. These are dojis. Doji, doji, doji. What does a doji mean? A doji means an uncertainty. We don't know. The buyers can't win. The sellers can't win. We fought to a relative stalemate. Nobody's caught long. Nobody's caught short. Everybody's managing their risk very, very tightly right now. You should look at a chart like that and say, okay, a doji formation is very important. They look like plus signs. They look like addition symbols. What that means is that they tried to buy the market. That didn't work. The sellers checked them. We tried to sell the market. That didn't work. The buyers checked them. We settled somewhere in the middle of the range. That suggests uncertainty. And you can almost chalk all that uncertainty up right there. You can almost chalk that up to your shutdown of the federal government. Guarantee it, because they know that the longer that this goes, the more economic impact it really could have. We already know that it's going to hurt your employment numbers next month, especially with Trump coming through and saying there's going to be a tremendous amount of layoffs coming to government workers. This is going to be an interesting dynamic. Is it enough to force a recession? It may not help. It may not help. So what we're looking at right now is we have a data set coming our way that's probably the most anticipated jobs number in a long, long time. And it's been suspended. And they're not telling us when they're going to release it because they don't know about it. Here's the kicker. Now, once you see the headlines that the government has resumed and they're going to come out of shutdown and they have a deal, we need to immediately be watching the news to see exactly when this NFP number is going to hit the board, because we don't know. We do not know. And anything we don't know, it's the old saying, what we don't know can't hurt us. What you don't know can hurt you very badly when you're trading. So that's another piece of psychology that you really need to understand. Absolutely huge. And I definitely wanted to start with that because that is the story of the day. That's a big one, and we need to be aware of that. So let's see. Blue Mango, please look at the Great Britain pound, Kiwi, and US dollar, Canadian dollar if possible. Yeah, we'll probably get to it towards the end of the stream, Blue. We're going to go over some psychology concepts, but dollar CAD is coming towards a key level. I'll look at that one and the Great Britain pound, Kiwi as well. A dollar face. Hello. Good to see you. Dollar. All right, guys. Let's get on with it. This is an interesting sort of a workshop here because there's so much news today. I probably should have canceled the workshop and just done the news, but we got to do both because that's sort of what we did. Now, U.S. government shutdown live. That's fine. That's huge. Prediction markets see government shutdown lasting nearly 2 weeks. Interesting. NFP will be delayed 2 weeks, maybe. That's fascinating. How the government shutdown may affect your money. Shutdown blocks student loan borrowers for forgiveness or repayment plans. Okay. I'm not really worried about any of that. This one's interesting. Supreme Court lets Fed Governor Lisa Cook keep her job pending oral argument in January. They pretty much know that she's out. But what this will do is this will keep Cook in that FOMC mix, potentially voting on policy moves towards the end of the year. That's 2 more meetings. A potential hawkish voice in that room when everybody's cutting interest rates. Cook is more likely to side with the hawkish narrative, as she did vote with Jay Powell really exclusively through the opening of the 10-year. Okay, remember, if you want to trade any of these ideas or do any of these strategies or whatever we're talking about here, join Switch Markets. Welcome to the Switch Markets community, all that jazz. Switch will give you market access to thousands of markets, zero commission accounts, and tight spreads. go ahead and check out Switch Markets over at switchmarkets.com and open a demo account today. Start trading with MT5 and get up and running. You can even trade live right by me on these websites, on these live streams. Many people do. Feel free to do just that. Okay, it's got some awards. We're probably the last day for the awards banner, but Best Broker MT5 Global, Best Trading Experience from Asia, and the Best Partnership Program out of Mania. So interesting stuff there if you're interested in lining up a new brokerage or getting involved in the market. Okay, trade update. This is what we want to start with. Inflation cools, 25,000 in play for the US 100. Not much to see here just yet. We've got that entry point selling, probably 24.925. Nothing wrong with that, but we are getting to where we need to be for the US, the 25,000 level here. It's going to be an interesting ride. Government shutdown, all of a sudden we're talking Fed rate cuts. We know we've got Cook's going to vote twice more than likely on those FOMC boards. Is policy, are we going to get those 2 rate cuts? All of a sudden we're creeping into the land of uncertainty. Typically that means bearish price action. Maybe, maybe not. I think that what you're going to get right here is probably some compression around 25,000, and that's all we're going to need to trade. All right, let's get on our psychology lesson. We've got 2 trade updates that I'm going to show you, but before we get into those, we've got to talk about the psychology of losing. We have to be able to take a loss. If you cannot take a loss the right way, you're going to be in big, big trouble. And all a loss is in the markets, let's see, Lewis Shepard, good to see you, Lewis. All a loss is in the markets is you're paying for information. That's it. It's very important that you understand that when you lose, it's not an insult on your intelligence. It's not an insult on really your dedication or your work ethic. It's part of doing business. Now, I will testify right here in front of everybody watching this stream. I hate losing. I can't stand it. I had to craft my trading approach to the market to where I ensured that I was winning a lot more than I was losing. I didn't deal with it very well at all. Now, there are times when you're going to take low probability trades trying to hit that home run and make a lot of money. Those big 10x payoffs and 8x, I don't talk about those much on these streams because they don't win very often. But there's a time to take those trades, and I know going in, when I take those trades, I don't really expect to win. But if they do win, well, then we're going to Hawaii or we're going to the Bahamas or somewhere nice. Actually, the Bahamas has got a travel restriction on it now. But you go to Hawaii or you go to Europe or Greece. Greece was fantastic. So what I'm trying to say here is we've got a trade with the Great Britain pound USD that looks like it's going to reverse in our favor. It was a loser. We got stopped out on that one after. I'm going to show it to you. And then we also got stopped out on a U.S. oil trade that I viewed as being extremely strong. I didn't think. That one's my fault, and I'm going to go right through it. We're going to break down the trade. I'm going to show you exactly what happened and how, in fact, we probably just got chopped out by a few points, and it's going to come back in our direction. So that's just the way that it is. Now, don't take losses personally. That's the number one thing. Let me see, Van Throtha. Good to see you. Welcome. A new name I don't recognize, but yeah, you're in. What's the name? What's name is the forest? I don't know. I'm sorry, I don't know. But good to see you, Van Throtha. I don't know, Dollar Face. You got me. So here's the deal. Anger costs money. And when we're talking about losing, we're talking about being triggered. And when you get triggered, you're not going to make good decisions. You're not going to make good decisions. And we've got a couple of trades we're going to show you that if you took them as losers, they could have triggered you. Now remember this, the best traders in the world are always even keel. They don't get too high, they don't get too low. They make all the trades that they should make and a few good trades. That's a great trader. Stay as baseline as you possibly can. That's absolutely critical. Steve Francis, good to see you. Dave F19. All right, guys, welcome. Let me see. Van Throtha, I'm from India. What is the name of the coin? The forest coin. I don't know, Dollar. You're sending me riddles. In any case, anger is going to cost you money. The great traders make all the trades they should make and a few good ones, and that's absolutely fantastic. So what I would like to say for each one of you, if you have a goal as a brand new trader, you need to be able to stay even-keeled. I don't care after a losing trade. I don't care after a winning trade. You've got to be able to do it. Now, what happens is when you get angry at your trading, it leads you to a defeatist attitude, meaning everything's up against us. The markets are against us. Everybody's hurting us. We're getting destroyed. Cats are living with dogs. It's absolute chaos and anarchy. That is not what's happening in the market. If you got stopped out and you lost a trade, you just lost it. It's not a big deal. Risk management, proper position sizing, you take the loss and you go, man, I thought I was going to win that one. What happened? That's what we have risk management for. If you don't and you get into that anger triggered mode, you're going to be a defeatist. That means the world's against you and you're never going to win. Every time I trade, have you ever found yourself saying that? Every time I trade on it, I sold it, the market goes up. I bought it, the market goes down. If you think like that, you're already finished. You just need to hang them up. Honestly, you can't think like that in this game, or you won't make it very long. You lose all your money, and you probably go crazy too. So if you have a defeatist attitude, don't do it. You got to be optimistic, cautiously optimistic, guys. Now, what happens with all this anger is it manifests itself in life. It manifests itself in probably domestic issues. Friends and family, you probably end up pushing them away. Excessive abuse of alcohol and drugs, substance abuse, and that's going to mess with your brain chemistry, which we're going to talk about here in a minute. And you're going to have an unstable mentality. You're going to be emotional all the time, and you can't have that as a trader because the markets are open 24/7. Well, crypto is 24/5 though, pretty much. Futures and forex, it's always there to get you. And if you think the market's the boogeyman's always there to get you. Be careful with your mentality. Nurture it. Take care of it. It's very, very important. So let's talk about how to keep our heads straight. All right, Great Britain Pound USD closes in on topside resistance. I loved this trade. I talked about it live. I said, man, we got a moving average up there. We got 78% retracement. I really like the 135 area. We're looking for 45 pips. I wanted to be very aggressive here. We got in on 134.74 to the sell. Let's go ahead and take a look at the trade. Well, you see right here, we got spiked out of this thing. Why do you think? Probably the government shutdown. That was a big part of it. We also had some EU CPI numbers that we're going to talk about here in a minute. But 30-minute chart, take a look. Where was our entry point? Our entry point was right in this red box. This high right here was 78, 134.78. You can see we got gobbled up right in here in our retracement to a low of what? The low is about 134.53. So you were actually, what, 25? Let's see, 125 points? Somewhere in there, 23 points in the green. Just to see what? This right here. Government shuts down. I mean, actually, this was after the government shut down. Right in here is when the government officially shut down. What happened right here? We had a dreadful, dreadful set of economic numbers today that really spiked the U.S. dollar. And, it really tanked the U.S. dollar. And then we had a nice top that sort of formed right here at 135.27. And we're coming down. We got stopped out at 135.09. So from a pragmatic perspective, what happened? What happened? What could have happened here to really shake us up? Number one, we had sweet entry. We had a great entry point. I thought we were going to get a chance to get it right there. Your high was 134.67, not quite. We held out for our secondary entry, which was right in this vicinity. We got the move that we were looking for. We just didn't get the last 20 points down to this value area. Bounces off of 62%, and now we're rocking and rolling to the top side. So what really happened here? Did we make an error in the trade? It was a bit aggressive. Probably a better trade would have been just to go right up here, right in front of 134.91, stop ourselves out, maybe up there above 50 and try to make a stand from there. So did we make a mistake? I don't know. Our risk management was pretty good. Our stop loss was pretty good. It was up right above 135. So that wasn't necessarily bad. What happened to us, though? And the answer is today's news cycle. We had a ton of it. We had a ton of economic data that came out, including EU CPI, ADP employment change, and ISM PMIs. And what did you have right here? Core CPI out of the Eurozone, the EU, came out really, in line with expectations, but still is showing that robust inflationary growth. That's interesting. Now, the pound's not the euro, of course, but still, it spiked interest in the forex. What else happened? We had the NBA 30-year mortgage rate ticked higher. That suggests a stronger dollar. That was during the pre-market, so that was right in here. It was really starting to work to our advantage. We had an opportunity there maybe to get an economic event work to our advantage, but then here's the kicker. ADP non-farm employment change, negative 32,000. That's an absolute horrible number. Absolutely horrible. Negative 32,000 is the first negative print since last month, which was revised down. A horrible employment number. Now, because we're not going to get NFP Friday, was there more emphasis on that ADP? Blew things up. How about the ISM manufacturing PMI? Came in a little bit better than expected, and manufacturing prices a little bit down. Crude oil inventories, we're going to talk about those in a minute. But what exactly happened right around 8 a.m. Eastern? We had a whole bunch of news hitting the market. And this bar right here, in my view, was the one that really hurt us. You saw the big rush of volume in. It's news-driven. What do you got? You've already got the uncertainty of a government shutdown. Now you've got a bunch of economic events. We lost. So psychologically, Did I make a mistake on that trade? Potentially. I wasn't aware of the news cycle. I let the trade run. Probably should have at least cut it off when we were up 25, knowing that there was a bunch of news coming out. Could have done that. Could have scratched the trade altogether because it's been out for a few days now. We expected it to go sooner. It did not. Or you could just let it run and stick with what you had. For me, I don't really mind that trade too much. We lost. I hate losing. But it wasn't the end of the world. Our risk was dialing in. Everything was ready to go. We just lost. Do we know why we lost now? Psychologically, that's how you need to study your losses. You need to go through and listen, don't get out in the weeds and try to say, okay, well, the reason why I lost was because of, a butterfly flapped its wings in India and I got over to the United States and the dollar went crazy. You can't do that. You'll go crazy. You'll absolutely go crazy. I mean, the markets are an abyss. You get what you take with you. And go into these things even-mannered and say, okay, Shane, why did you lose the trade? Was your entry good enough? Entry was, on second thought, I probably could have just put it up near the 78%, but I wanted to make sure I got the moving average in there too. So I wanted to be aggressive there. I don't really have a problem with my entry. Should we have taken a bigger draw, maybe put, risked 100 pips to get a big reversal here? We could have done that, but given the news cycle and the potential for the shutdown, probably not the best idea to put a huge stop loss on something that may or may not gobble us up. So was it a good trade or a bad trade? It was a loser. Losers are losers. But when you study your trades, you go through your checklist. Did I follow my strategy? Yeah. Did I stick to my discipline, my stop loss? Yeah. How was my risk? 1 to 3 or 5% max? Yeah. Okay, so I got those 3 things down. Things didn't go our way. We think we know why. It was the big rush of news and the big rush of volume into the market. I feel pretty good about that. It's not like we lost the farm or the house. And we also have an idea of why the technicals didn't work, because we had a big flood of volume and momentum, or that created momentum in the market. Now, the thing about volumes is we typically can't predict when they're going to come into the market. We know the times where the markets are the most active consistently, and we know when our news events are. So maybe from that perspective, knowing that news events are coming, maybe could have pulled the trade off or taken profits ahead of them, maybe, or let them run. To me, that's how I evaluate losers. I get in there and try to figure out why it lost. And then I look and see if I did anything wrong. That's absolutely key, guys. That keeps you out of the anger-triggered mentality. It always keeps you thinking and makes you able to evaluate your performance from several different perspectives. And the best way to evaluate your perspective, and we're going to have a journal out to you relatively soon. You journal all your trades, of course. You look at your performance. Then you got to step out of your own skin, and you need to look exactly what happened in the market, because the market does not lie to you. The price went up in our face. That's just the way it is. Why did it go up in our face? Well, the volume came in. Why did the volume come in? Because we had a bunch of numbers come out, and one of them was a big surprise. So think about it along those lines. There's a reason why you lose trades. And as long as it's not you overtrading, we're going to talk about 3 big pitfalls here in a second. But as long as you're not making mistakes physically or mentally and you take a loss, it ain't the end of the world. You can live with that. You can live with those. What you can't live with is the psychological mistakes all day long. Those will eat you alive. Okay, Andy Tong, good to see you, Andy. I have some questions. This is a live question Q&A. Let me see. 3 strikes and I'm out is my rule. Fantastic, Eli. That's great. Let's see. Van Throtha. My inner mind have chaos wherever. I study trading, but the thing is here to trigger me what I should learn first. In years, footprint chart, book map. Sorry, I'm lost. Please guide me. Well, the first thing I would do is learn as much as you can about the markets. Don't focus on your strategy just yet. Learn about price discovery. We've got a ton of Academy material in the How to Trade website. Go over there, check it out, and understand how a market's made, what moves price, how markets function. Really the idea that of price discovery itself. You need to understand the dialogue between buyers and sellers and why price moves in the first place. Then you need to really get into the strategic aspect of things. You need to learn about when volumes come into the market, like I just talked about, economic events, things like that, what influences market behavior. And then you need to start looking at technicals and try to figure out which technicals you like to use. Most of us use technicals. I don't know that there's any fundamental traders in here necessarily because it's expensive to be one. to play the news event. There's folks out there that are taking positions against NFP right now. They have very deep pockets. We don't. So that's what I would recommend. I would get in there, learn, open a demo account, start trading, use some technicals, maybe enter some contests when you feel adept at entering and exiting trades on your platform. I think that's a big help. And then from there, you just start trading with a very, very small account and start getting used to the psychology of it and what it is to be a trader. Hope that helps, man. Nico Letterman. Hello, Shane. How do I gain confidence in my model? Confidence for me came through experience. The more experience you have, the more confident you're more than likely going to be. Now, we can always argue, the power of negative reinforcement can destroy your confidence. But if you, in fact, have a trading model that's built, maybe a system off of a strategy of some sort, number one, you've probably already done back testing. So if you've already done a bunch of back testing, you know that, okay, this thing looks statistically viable over time. Can I apply this in the live market? What gives me the confidence to do this? Well, if you've already back tested and you want to apply it according to your back tested results to the live market, then you just line up your system and let it run. But here's where your confidence in your system is going to be. It's going to be in your risk management. As long as you're not overextended, there's no real reason to worry about a system trade. There really isn't. I mean, the idea is like, okay, well, I back tested over the last 90 days on a 5-minute chart. I'm doing crossovers, and we had 70 trades, and I'm 50 and 20, and we've got a nice profit here. Okay, then you've got something. It's not many trials, but let's just say you got a winning record and a profitable track record, so you just let it run. Then it's just about, okay, study the number of losers in a row and try to figure out how to weather those storms before you get to the profitability. And that comes in with risk management, 1 to 3% of your capital, maybe 5%, and I know that's not very much, but if you're talking about being safe for the long term, most of us trade with a little bit more than that. I'm just going to leave it at that. But those parameters should give you confidence that you're going to be around for the long run. That's what I would say. Back test first. There's a lot of advanced things that we could talk about, walk forward analysis and all sorts of Monte Carlo simulations and things that show you your profitability, your odds of profit being profitable over X amount of time in the future. I'm not going to leave it alone because it's too dang hard. It's really hard. You don't have to go that route. Back test, try to find an edge, apply it in the live market, observe your slippage and commissions, their impact on your performance. Do that for a month. If you have good numbers, then just keep doing it. Then it's just a matter of risk management. That's what I would say. Let me see. Bill R. Gold got me on tilt today, though. Bill R. What happened to gold? All right. I have to look at gold. Gold got me on tilt. All right. Let's take a look. Here's our EMA crossover. This is a beautiful thing. 4 hours. I mean, you're still in that position and you're riding it hard. But let's go ahead and take a look at. Let's go take a look at the daily. Let's look at our daily chart here. It's just compression. So if you're intraday trading, I would probably take this down to a 30-minute. Okay, so now you sort of have a sell setting up on the 30-minute, that's really problematic in a lot of ways to hold shorts in gold. So I don't know that if you bought in here, and it looks to me like we got a little bit or some heavy selling right around 38.96, something like that. That's a big time sell-off right there. And then you got a bit of not really a rebound, but you got that crossover, the 9 crosses over the 20, and the market's supposed to fall apart, and then it rebounds. I feel for you, Bill. I feel for you because, there's nothing you could have really done. If you got long here, really going into that London session, then you crushed it. But if you showed up for the U.S. session, it's sort of just been a dead cat right there, 8:30 a.m., 10:30 a.m. Eastern. You had more news dropping, crazy candle. Man, this is really this is really difficult stuff. That's why short time frames can be a real challenge. That's why I focus on key levels. When the price gets to my level, then I trade it. And my levels are typically macro. We had a pullback, we're looking at for gold right now exactly. Let's see if we can find out where it is. I don't recall right offhand. Let's go down to a weekly. This is just an explosive market. Yeah, our trade idea has already been knocked out because we're making new highs. But you can see that, actually, the trade idea is a sell from just beneath 4,000. But we've been trying to buy pullbacks on this thing for days, and it just doesn't seem to want to give us a shot at it. So looking to sell right up there in front of 39. What are the bullish market drivers? Bullish market drivers are dovish policy, number one. Uncertainty over the government shutdown, you bet. That's going to draw some bids to the market. Mobilization of a large number of U.S. troops into the Caribbean, potential offensive against Venezuela, you bet. Russia-Ukraine, you bet. We could go on and on and on about all the bullish market drivers for gold. We've been calling for 4,000 gold for a while now. I'm seeing experts for JP Morgan and Goldman Sachs say 7,000 now. I don't know. I really don't know. I think you're probably going to get a shot at 4,000 though, and some compression there. So gold's been very difficult. I've been out of the gold market lately just because I'm not long. And I want to scalp 4,000. That's going to happen. A potential trade you may want to look at is just really any way to buy a retracement at this point. Love the daily chart. It's one of my favorites. 38.27, something like that. 38.25. That's a pretty good long right there, probably for $10 or so. So I'd be watching that relatively closely. Any way to get long. Any way to get long. So I feel you're paying their bill. Let me see. Daniel Leffer, the best winner is who can the best. Who can lose the best? 100%, Daniel. The best winner is the one who can lose the best. The less you lose. Remember, every penny you lose, you have to make back at some point. And then some to be profitable. So, 6 to 1, half a dozen to the other. I mean, every time you lose, you got to win and then some. Of course, nobody likes to lose. If this was easy, what you would do is show up every day and take the money and go home. Personally, that's what I try to do. That's my own mentality. That's how I was brought into the game, to think in terms of cash. How much cash do you need to make today? Get in there and get it in the most efficient, safest way possible. That's what I was taught. It doesn't always work. Sometimes you lose, and when I find the losses compound, that's when I quit. Eli said it best, 3 strikes and I'm out. Absolutely. If I'm intraday trading and I lose 2 in a row, I'm seriously thinking about quitting. My biggest losing days I've ever had have started with a small loss, and I keep trading and keep taking more risk, and it gets uglier and uglier and uglier. And that's a real problem. Learned early on I had to shut that down. And if I didn't shut it down, I wouldn't be trading very long. So let's see, ICT, and smart money concepts. You can get into those, Van Throth, if you'd like. I'm not an expert on those. I talk a little bit about it, but you could do it. Let me see, Daniel, should I start buy the joy pairs at this level? Looks like the monthly low, the euro yen and the Swiss yen. Yeah, we can look at those. We got a list of markets we're going to look at here. I got a few other things to go through first. Let me see, Cali. I keep it small entering and scale it up later. That's not a bad idea, Cali. I was watching several traders. I remember one of the traders that used to be a mentor here or a trading coach here, Nick Quinn. That was one of the things that he really championed. He would start with an average position, and then when it started to go in his favor, he would pyramid into those things. So when he got the big move, the big runner that he was looking for, it really paid off in a major way. There's absolutely nothing wrong with that. Keep it small entering and scale it up later. That's scaling in a nutshell. Let me see. Let's see, Droopy. Hey, Shane, good stuff. In terms of building confidence, do you feel prop trading is a good stepping stone between paper trading, back testing, and using bigger money? 100%. Prop trading. Here's my progression. If you're a brand new trader, this is what I would do. I didn't follow this plan. I was on a compressed timeline, and I had to make money when I first started. So things for me were sort of trial by fire. I don't recommend doing it the way that I did it or the way that I had to do it. Hey, listen, guys, when I got into the market, I needed money. I had a house payment to make, and I was given a strategy, and I was given some money and said, get in there and start trading. Get in there, start winning and losing. I want to see what you're made of in 6 months. That's how I started. I don't recommend that. Too much pressure. I was not ready. Things happened too fast. I didn't know what I was doing. Had some success. Didn't know what I was doing. If you were going to start off as a basic trader and build your confidence, number one, get some education. Learn about price discovery. Learn about how the markets work. Learn what the markets are. Learn the times of the day that they trade. All these things are very important for beginners. Start there. Start with a basic education. Second, open a demo account. Open a demo account. They're free all over the place. Head on over to Switch Markets if you want. Open a demo there, MT5. Get in there and start placing trades on demo. Start buying and selling on demo. Make sure that you understand how to work the buttons correctly. That's great. That's physical practice. That's fantastic. Number 3, what I would say, Droopy, is the third step before trading your own money, I would say would be a split, either between trading prop, where you're trading someone else's money. That's a great way to do it. Just find affordable props. Start doing cheap prop programs. Don't get in there and spend $1,000 to be in a prop firm program because you don't really know anything yet. Trade some affordable props, some smaller accounts. Just get in there, get used to going back and forth with the market. Do that. That's a great step 3. You're also another step 3, trading contests. There's a lot of free trading contests out there. Get in there and do some of these trading contests. Why not? You got nothing to lose. They're free. Give it a shot. And that would be probably 3A. So, and then, of course, lastly, the last step would be trading real money. And you'll find that once you start trading real money, the journey's never over. You keep going with your education no matter what. That would be my progression. Realistically, basic education, demo account, either a trading contest or prop trading, and then finally real money. With real money, small first, small account, and then expand, grow. Once you see you can grow that small account, then you start piling the money in and try to make really a horse race out of your financial goals. That's what I highly recommend. That would be the progression. How long will it take? You could be up and running doing that within 3 months, realistically. Now, when you get to your real money, start small. It may take you a long time to build that initial capital into something that really shows you that you're a profitable trader. That's how I would do it today. Let me see. Bill R., I want to be long. Yeah, I want to be long gold too. Absolutely. We just got to figure out a way to get in that mess. All right, Nico. Also, I don't know if you've already covered this, but what is the difference between the ADP non-farm employment change, which was today, and NFP on Friday? Well, I mean, the biggest thing is that the ADP isn't really the official figure. That's out of the ADP. It's not out of the Bureau of Labor Statistics. The government number has sort of been the final word in your employment data. So when it comes from the BLS, the Bureau of Labor Statistics, that means that it is the official number. It's the official number. Everything else is just speculation. Jolt's job openings is speculation. ADP is speculation. So that's just sort of where we're at there. So that's the big difference. The BLS is number. The NFP is the end all be all. The ADP is a private set of numbers. So think like a think tank. That's what I would say. Like the ISM manufacturing and all that stuff. ADP. We have our own employment numbers, and those are for the private sector, which or for the private sector from the private sector. So you never know. Let me see. Tina Howe. Good to see you. Tina, welcome. How to run the Martiello test, please. Boy, I am not. That stumped me, Tina. How to run the Martiello test? I don't know how. I would have to research that and get back to you. Honestly, I don't know it. And one of the rules of this stream is if I don't know, I won't tell you. Okay, we've got to talk crude oil here because one of the other rules of this stream is we don't run from losers. We lean into them. We try to figure out exactly what happened. A bearish breakout on U.S. oil. I went on and on about this trade. I really loved an early October break beneath August low of 61.45. We were looking for about 60 pips somewhere in there. We didn't get it. We did not even close. We didn't get it. Now, there's a couple of reasons for this. Number one was we got and it's the first day of the month, so we were looking for a big washout there. We didn't get it. Let's go right to our charts. So here's your monthly. What we were looking at is that double bottom at 61.45, low 61.45, low 61.45. So we were looking to sell 44s somewhere down in there and look to get that runner, and we just didn't get any love at all. We got about 4 ticks and then a big reversal, and now, of course, we're coming off again. So the reversal stopped us out. If you want to go ahead and take a look at the 30-minute chart, what happened? Right there, opening bell. There was it. Boom. We rotated up, and then we came back down to break even several times, and then we sort of broke the other way. This bar right here was our EIA oil report, crude oil inventories report, or this one right here. That was that one right there, real tight inventories. That brought a lot of volume into the market. You can see the volume just sort of spiked. It was bearish volume, which was good for us, and then the market just broke up against us. A lot going on today. Number one, there was an OPEC meeting. There was an OPEC meeting. They didn't say much, but OPEC met, and when they meet, it screws oil prices up typically in the short run. We also had the EIA inventories report. I'm going to go over those in a second. That brought volume into the market. That screwed us up. First day of the month, breaking beneath the previous 2 months low. I liked it. I would have loved to have traded for a few days and then broken down from there. And also the government shutdown. That's going to bring more demand issues into play as we roll into the fall months. That should have brought us into the bearish situation. It did not. And lastly, the last thing I'm going to say about it is something I should have been hip to and told you guys about. Futures. So the thing about a CFD like U.S. oil is that it tracks the front month futures contracts. So these prices, not necessarily on a 30-minute chart, but let's go like on a daily chart. So if you look at what futures contract was this thing tracking back in September? Probably October crude. So the prices back then were different from what we're seeing out of November crude futures, which is the current price of your U.S. oil contract. I know you're confused. I get it. That's one of the challenges by trading U.S. oil. It is a CFD. So if you're going to trade that, you almost have to position trade it. Now, it's my fault. I tried to be way too fine with the breakout. I should have sold like 61.25s, and we probably will be okay. Now, we got chopped up. On the futures contracts, we didn't get chopped up. You can see right there the low. Last month's low is right there at 61.06. Okay. The previous month's low is at 60.85. Right there is your breakout setting up. There's absolutely no question that's your breakout. So once we break beneath 61.06, there could be a little bit of compression at 61, but once 61 goes, then we're going to make a run down in here more than likely. Now, it doesn't help us now because the trade idea said we'll trade it beneath 61.45. I figured it would be good enough to get that big washout down there. We did not. It was a 4-tick failed auction and then bounced in our face. That sucks. I don't like that. Psychologically, on that loss, we broke it down. We know why we lost. The discrepancy between the CFD and futures contracts. That's the number one reason that breakout didn't lose. So you can't really trade CFDs on a breakout basis. That's my fault. I missed that. So that's a big strike. That makes that a bad trade in my view and a mistake. Now, do we still like this trade? I love it on the futures market. I'm still looking at it. I'm probably going to be placing that with my own money. I have no problem playing a washout underneath 61, none at all. Now, the question becomes, how do we move on from a loss like that? A bad trade loss. Now, remember, our Great Britain Pound USD trade, I sort of lined it up and said, it wasn't a bad loss. We got stopped out because there was a big flood of volume into the market. That wasn't a bad one. This one right here, we missed something. Our analytics were skewed. They weren't good enough. Meaning, if there's smart money and dumb money, that trade right there was dumb money. Didn't know the game, didn't understand the levels, didn't know the game I was playing. That's not good enough. So that trade right there, I mean, if you're going to beat yourself up over a specific type of trade, you beat yourself up over these kinds of trades where you miss something, where you missed it. Remember, you're playing with money. This is real money. Okay, if you miss enough trades or if you make enough mistakes, you're broke. You're out of there, kid. And I don't want to see that at anybody. When you make a trade, know as much as you can about it. Now, there's a fine line between overanalyzing and everything. But you've got to understand that, okay, that's a CFD, Shane. It's not really tracking the same futures contract. Is there any relevance to that price? I'd say, figured, yeah, probably would get a washout, but it did not line up with the November crude, which we're now pricing. Should have thought about that. That's a real advanced concept right there. But that's a trade where a mistake was made. Don't dwell on your mistakes, but don't let yourself off the hook either. Hold yourself accountable. If you make a mistake, you make a mistake. And that's key, guys. That's a big part of trading psychology, that's for sure. Let me see. Callie Buckle. What does the shutdown mean? Well, the shutdown in essence means that your government folks, your government functions are going to be offline. So you're going to see folks like military members aren't going to be paid. They're not going to receive their pay, at least on time. You're going to see a lot of government workers aren't going to see their pay. You're going to see maybe a slowdown at the post office. You could definitely see that, which could definitely lead to some logistics concerns. You could also see a bunch of federal workers get fired. That's what Trump said he was going to do today. He said, well, if we shut the government down, I'm going to downsize a bunch of workers. So that could potentially be a big-time deal because those workers are going to be unemployed, and then you're going to have to hire those back, and then you're going to have to cover back pay to the military folks a little bit later on. It could really create a bit of a period of skewed economic data. Depends on how long it goes. We just don't know. We just don't know. But it means uncertainty, Callie. It means uncertainty. Andy Tong, where can we see these trade ideas? I looked on Switch Markets, but no cigar. Yeah, these are over at How to Trade. I post these on How to Trade. We are looking for an analytics thread to be launched on Switch Markets here. I don't know when. potentially by the end of the year. So the trade ideas and the trade updates and things, those will be on Switch at some point. Right now, they're on How to Trade. You just go right there. It's on the front under resources of the website, or you go in the trading room and follow me. You'll get them emailed to your address. You can also check them out on our analytics thread on the Switch Market, or excuse me, on the How to Trade website. You can also see them online. I typically post these on the How to Trade on X or ShaneV_Trader on X. You can definitely do that as well. So they're out there. They're around, Andy. I put them out ahead of time, and have had pretty good success this year. I don't usually lose 2 in a row, but we lost 2 in a row. So there you go. Eli, do you use TradingView app or website? I use the app. I downloaded the app. I got big screens here. I don't really like the web. There's nothing wrong with using the web portal. It's fast, but I've got my app downloaded directly to my computer, so I can keep this screen open in an app format, and then I can run my order entry platform right next to it. Punpalooza, use spaceship, toilet seat, and sleep. I don't know what you're talking about, partner. All right, Eli, make sure it goes in the journal. Absolutely. We'll be journaling that up. Okay, there's a few other things that we do need to cover here from a psychological standpoint that are key. I don't know if I'm going to get to some of those markets today. That might be pretty tough. This is the big number today was going to be your ADP non-farm employment change. That was a big one. Private businesses in the U.S. cut 32,000 jobs in September following a revised loss, defying forecast for a $50,000 gain. It marks the steepest job decline since March 2023 and the first time since 2020 that the private sector has cut jobs 2 consecutive months. That's a big deal. And that's one of the reasons why the markets went crazy and the dollar went crazy. That ADP number was a big deal today because it's a bad miss. It's a bad miss, and what that did is it shook everything up. And you see right there, you've got back-to-back losing months, but moreover, you've got 3 out of the last 4. You're seeing the private sector do a little bit of downsizing, and what that means is it's hard to sustain economic growth when you have the private sector downsizing. Typically, things like this are the precursor to a recession. Do we get there? Jury's still out. I don't rightly know. We're going to see, though. That's for sure. But really a big-time chart and something that a lot of people are really running from. Okay, now remember, just the last few minutes on our psychology workshop. Your brain chemistry is absolutely everything. 2 hormones, cortisol and dopamine. Cortisol is your stress. That's what brings pressure. So those losing trades from earlier today, those are what's going to bring the pressure on you. Now, dopamine, euphoria, a winning trade can almost be just as deadly to your trading account. The euphoria kicks in, and all of a sudden you start craving that dopamine drip. That's essentially what cell phones are built on, and texting and social media. When you interact with these things, it gives you the dopamine. Your trading and your charts are no different. They're absolutely no different. So be aware of that. When you're on your chart and you make a few bucks and you make a few more and you hit a big trade, understand that dopamine is going to get you. Be sure that you stay with your strategy and stay even keeled. It's absolutely huge that you understand that's the most important part of trading. All right, cortisol is your stress, dopamine is euphoria. That's all there is to it, guys. If you're stressed out, more than likely it's because of a loss. And if you find yourself in a stressed condition without the markets, meaning cortisol dumps, typically those are a product of alcohol can cause them, coming off of alcohol. That's a big one. Family issues. Maybe your bills, your financial situation's tough. Maybe the weather's got you stressed out. You know, it's a million different things that can stress you. When you're stressed, I would highly advise probably cutting your leverage down or not trading. You need to feel good. You need to feel good up here before you can really do it well. Dopamine's euphoria. That's the other side of it. When you're euphoric, you're going to take crazy risks and chances because you feel like you've got it under control. So if you find yourself feeling extra exuberant and euphoric, you probably need to shut it down for a little bit. One of my first mentors that was from not how to trade, but was over at Top Step Trader. I remember that he was telling me, I was talking to him on the telephone, and he said, "Hey, listen, when I was in the pit, after some of my biggest days, I would take a few days off." He said, after some of my biggest winners, I would take a few days off. And the reason why I would do that is because I typically saw my performance really dropped off badly after I won. Interesting stuff. Euphoria can be just as deadly as stress. Stress sometimes brings out the best in us. But when you're overwhelmed, shut it down. You're going to make mistakes. All right, here's the three major trade-related problems that are psychological. Hopeless trading, I talked about that earlier. If you have a defeatist attitude and everybody's against you and everything's against you, and if you buy, the market's going to fall, and if you sell, the market's going to rise, quit right now. Don't be hopeless. If you're hopeless, there's no point even being in there, because even when you win, it's like, well, I've got to win more. It's always a defeatist attitude. Get away from that. Get as far away from that as you can. Hopeless trading, it's not just going to lose you money. You're going to basically live a miserable life. Don't do that. We all go through our ups and downs in life, guys. Good periods, bad periods. If you're hopeless in front of the screens, quit. Go find something else to do. Addictive trading. We just talked about this. Dopamine. Dopamine's the addictor. Very few people get hooked on cortisol and stress hormones. Typically, stress hurts us physically, manifests itself physically. It also makes us very, very tired and fatigued. Dopamine's the other way around. It's euphoric. Dopamine's what hooks you. So, all it takes is a few big winners and that big dopamine dump that gets you really, really high. And all of a sudden, you can't stop trading. You overtrade. You take huge risks. That's going to destroy you as well. Everything has to be structured. If I could give one piece of advice, enjoy the process. Enjoy the research. Enjoy building your strategy. Enjoy monitoring your results. That'll keep you away from that euphoria and just keep this business as usual. Save your euphoria for something else. Save it for your cell phone or go surfing or something. Go skiing. Do something else to get your kicks, because trading, it should be fun, and there's absolutely no harm in doing that. But what you've got to do is you've got to be able to handle yourself in the live market. No question about it. So be careful there. And as far as, the last one, we've got addictive trading. We've got hopeless trading. The biggest thing that you've got to do is not be triggered in the markets. So your three major related problem is paralysis. That's a monster. It's when you can't do anything at all. You're paralyzed. That comes from cortisol. No question about it. So when you're here and you're stressed, odds are you're going to be like, if I get in, I'm going to lose. Market paralysis is a big one, because you miss trades you should be taking and you're not making money. Yeah, you're not losing anything, but you're not making anything. And the problem with that is time. The time just goes by. The days turn into weeks. The weeks turn into months. The months turn into years. And you'll find yourself sitting here going, I've gotten nowhere in the last decade. Believe me, traders are out there like that. Market paralysis. If you're in the market, you need to be ready to go and ready to trade. That means even-keeled, balanced brain, balanced chemistry, and ready to roll. Being able to deal with a loss. Huge. That's absolutely huge. Let me see. Events in Vegas, short, Pally, now massively public offering while dilution coming in the next hours, guys. Short Pally now. All right. Must be a crypto play. Short Pally. Eli, exercise is the best. If you want to stay balanced, you got to exercise. For me personally, I'm going to hit the gym right now, probably in the next 20 minutes, and I'll be in there for an hour, a couple hours usually, but try to do today will be back day, heavy back day. But by the time I leave there, Eli, I'll be exhausted and there won't be any time for stress. All there'll be time for is evaluating today's performance, taking a look at what we need to do tomorrow, and just recapping and game plan and getting ready to go. Let me see. Isaac, I needed this. I blew my account today. Well, Isaac, it happens to everybody. It really does happen to everybody. I'll tell you a brief anecdote about. I'm not going to get my way back machine and tell you about some of the trials and tribulations I had as a young trader. I remember one day was bad. I took just a terrible loss that I shouldn't have taken. I didn't have the money to take it. I was under incredible stress, and it was shortly after the 7 V-Bar trading group, which is where I was trading for my uncle. With that disbanded upon his untimely death, and so he died. The trading group disbanded. I had a little bit of money, and I went into the markets, and I said, okay, I've got to make a living right now. And I didn't have much money, and I got in there, and I took a loss one day that it happened so fast, and I remember just being destroyed. It was a $1,500 loss in the gold market, and I just didn't have enough money to take that loss. That was roughly 20% of my trading account at the time. What was I trading with? About 10 grand. 10 grand in 2012 dollars. So probably more like 15 or 17,000 now. But I took that loss, and I remember losing it on a compression pattern in gold. I was playing a breakout in gold, and it just rotated every time I played the break. And I tried it like 3 or 4 times, and I looked down, and I took all these small losses, and I looked down. I was down like 1,500. No, that's not true. I was down about 950 or 1,000. And then I went into the NASDAQ market because I wanted to make something back right on the daily close. Thursday, I believe this was a Thursday. So I'd been trading all week long, and I was exhausted. I'd been in front of the screen since 6 a.m. my time, and I was rolling into 2 p.m., so I was looking about my 8th hour in front of the screen. Very tired. I got in there on the NASDAQ, and I lost another 600 so fast I couldn't believe it. And so I was down 1,500 for the day. Went and laid down. Went and got in bed and laid down and went to sleep. And the thing was, is when I went to sleep, when I woke up, I felt worse than when I went to sleep. I didn't feel any better because that loss was waiting for me. That was a devastating thing. And after that, I didn't trade. I shut it down after that for a few months, 3 or 4 months. And then I got back into prop trading, and I started rebuilding my psychology with my prop trading from there. It was a good experience, but it was really, really tough. It was really tough on me to take those losses in a time when I couldn't lose. So we fast forward, 15 years. And this last summer, I took a bigger loss, a much bigger loss in the gold market. But number one, I could afford to lose it. And number two, it didn't bother me nearly as much psychologically. So full disclosure, I was trading gold futures back in July. We had an untimely sweep. I covered it at the time. It might have been in August. I think it was late July or August. See, I don't even remember because it's not important now. But I was in these positions playing my range number against a breakout trend. There was a big news event. I think Trump said something mid-session. By the time the dust cleared, I lost $3,000. All right. It happened fast. Happened in about 20 minutes. Happened fast. Broke against me. Price, I just said, I just got to stick in this a few more minutes and it's going to come back my way. Usually on a big spike like that, a big spike of volatility, you get the immediate bounce back, and it just wasn't going to let me out. So I was sitting there going, okay. So I took the first loss, which was about, I don't know what it was, about 1,700 or so. Okay. I'm shorting into some heavy heat. And I go, okay, that was my first range number. That didn't work too well. Okay, so I'm down 17. I can still make a horse race out of this. We got a market that's moving. I have another range number up there to take a short. Went in there, hit the next range number, went short, made 500, back down 1,200. I said, okay, we're back now. I'm going to string this together. I'm going to get out of here with a win, and I'm going to show the world that I can come back from a major loss right off the bat. It wasn't a major loss, but it was a big one to start the day. So then what do? I hit that range number again. End up getting chopped out. Why? Because I didn't believe in it. I took a 500 loss, gave that 500 back. I'm back down 1,700. And I said, okay, this is the top of the market. It's got to be. And then I take another shot at it on that second range number. Price blows against me. Couldn't get out. Took another 1,300 out. That was the day. What could I have done differently? A million things. Was it a bad trade? Probably the second entry was. Probably should have just scratched it after losing the 1,700. Should have said, well, this is a very, very heavy trend. My range numbers aren't working. Probably need to hang them up for today. Had I done that, I wouldn't have lost the money. But my psychology wasn't that horrible after that. I said, man, that was a big loss you took here, Shane. I said, yeah, but it's been a pretty good year. We've been in it. We've been winning and losing all year long. So it's okay. We're all right. Came back the next day, went to work, made some money. Next week, didn't even really think about it. So what I'm saying is, Isaac, it happens to everybody. You blew your account out. I don't care if it was $50, $500, or $5,000. The amount, it's always too much. So stick with it. Come back. Do some demo trading. If you don't have any money at all, do a little, maybe get into a prop account. Take some time off. Take a few days off. Take a few weeks off. If you lost a lot of money, take a few months off. You got to feel good before you get back in here. But you do need to, don't let that loss or that lesson go to waste. That's the biggest thing I would say. All right, let's see. Eli, leg day. He's doing leg day today. And exercise is getting money. Yeah, that's a fact. All right, guys, I've gone on way too long, about an hour again on one of these workshops. We're going to be back tomorrow over at Switch Markets exclusively on YouTube. We're going to be doing a 5813 scalping. That will be an exclusively trading workshop. It's going to a live webinar. We're going to get in here. We're going to scalp. We're probably going to be looking at some equities indices. We're going to look at some forex pairs, and we're going to be scalping short time frames, 5, 15, 30 minutes on that 5813 EMA crossover strategy. We're going to go through how to trade it. We're going to go through, answer any questions you may have, and then we're also going to execute some trades. So that's exclusively over at Switch Markets on YouTube, the Switch Markets channel, or you can join us over in the How to Trade trading room. You just got to join, get an account, join us in the trading room, and then check out the live stream when it comes across the board. All right, everybody, that's enough for me. That was our Wednesday psychology session and Q&A. Thank you for all the questions and the engagement. I certainly love answering the questions. They're a lot of fun. Maybe we'll just do some streams where I answer any and all questions. And my apologies for not getting to your markets today, but we've got a lot to deal with. We will be doing some live trading tomorrow. And stay tuned for NFP. I believe NFP is going to be canceled for Friday, but we may still go and stream at the same time anyways and sort of talk about the job situation and potentially cash in on a few pre-market trades. All right, guys, have a fantastic trading day. Trade the action well, and we'll talk soon. See you.